It started as a Bitcoin miner, a small Australian company digging for digital gold in the Canadian wilderness, using cheap renewable power. Then AI happened. The stock went from $5 to $76, then crashed back to $39. And somewhere in that price chart is one of the most interesting pivots in the market right now. A company that looked at the biggest infrastructure build-out in human history and quietly repositioned itself right in the middle of it. Before most people had heard of GPU clouds, IREN was already building one, and Microsoft just handed them a $9.7 billion contract to prove it was real. Hi, hope you're having a good week thus far, and welcome back to Ticker Talk. One stock, 5 minutes, no jargon. Let's go. What they do. IREN started in 2018 as a Bitcoin miner. The model was simple. Find the cheapest renewable electricity in the world, build data centers next to it, mine Bitcoin at margins most competitors couldn't touch. At Childress, Texas, their power cost was 2.9 cents per kilowatt hour. Exceptionally cheap, but in 2024 the AI infrastructure build-out exploded. And the same facilities, power connections and cooling systems that made IREN a great Bitcoin miner made it a near-perfect AI data center operator. The economics were even better. Bitcoin mining generates roughly $2 million of revenue per megawatt. AI cloud services generate over $10 million per megawatt. So they pivoted fast. Today, IREN operates 750 megawatts at Childress, 160 megawatts in British Columbia, and holds a 2-gigawatt pipeline at Sweetwater, Texas, one of the largest secured power footprints in North America. The Bitcoin mining still runs, but the story is now AI. The numbers Q1 FY 2026 was a record. Revenue of $240 million, up 355% year-on-year. Adjusted EBITDA of $91.7 million, up 3,568%. Q2 was softer, revenue of $184 million, a net loss of $155 million, partly from a $111 million debt conversion expense. The transition creates lumpy numbers while the GPU fleet ramps. Here is what matters. AI cloud revenue in Q2 was just $17 million. The Microsoft deal was signed in November 2025. Management is targeting $3.4 billion in annualized AI cloud revenue by end of 2026, scaling from 4,300 GPUs today to 140,000. That gap between $17 million and $3.4 billion is the entire investment thesis. The bull case. The Microsoft deal is the headline. The infrastructure is the moat. Nearly 3 gigawatts of secured grid-connected power. At a time when AI hyperscalers are desperately hunting for electricity, when data centers are being limited by power capacity, not money, IREN has something almost impossible to replicate. You cannot permit, build and connect 3 gigawatts in a few years. IREN already has it. The Microsoft contract provides $1.9 billion in expected annual recurring revenue at 85% EBITDA margins, with a 20% customer prepayment. Microsoft is effectively funding IREN's build-out, and Microsoft doesn't sign $9.7 billion contracts with companies they don't trust to execute. As IREN shifts capacity from Bitcoin ASICs to GPUs, every megawatt converted multiplies revenue by more than 5. Analyst price targets run from $36 to $125, with Bernstein at $75 and Roth Capital at $82. The bear case. The gap between guidance and reality has to close in months, not years. $17 million in quarterly AI revenue against a $3.4 billion annualized target by December 2026. That requires the GPU fleet to scale from 4,300 to 140,000 in under 12 months. Hardware, installation, power energization, customer onboarding, all simultaneously. One delay anywhere and the guidance misses badly. Short interest has climbed to 15.6%. The bears see a company burning cash to chase a target that keeps moving, with $2.3 billion in convertible notes adding dilution risk. Bitcoin still dominates current revenue, If it enters a bear market while the AI ramp is incomplete, the transition weakens at exactly the wrong moment. The stock has already done the round trip, $5 to $76 to $39. The question is whether $39 is the floor or a stop on the way to $25. Here's where I land. The power pipeline is real. The Microsoft deal is real. IREN has something AI hyperscalers genuinely need and cannot easily replicate. The risk is execution speed. Watch two numbers every quarter: AI cloud revenue and GPU count. Is revenue doubling sequentially? Is the fleet tracking toward 140,000 by December 2026? Those two data points tell you everything about whether the thesis is intact. This is not a stock for the risk-averse, but for investors who believe AI infrastructure demand is structural and power scarcity is the bottleneck. IREN might be the most interesting pick-and-shovel play most people haven't looked at closely enough. Not financial advice. Do your own research. All figures from IREN public SEC filings. One stock, 5 minutes. No jargon. See you next week.